Hey everybody, it's Justin, the Canadian Crypto Hunter, and today I'm going to talk to you about how to not get in your own way as a trader. And how I'm going to teach you is by showing you how I got in my own way as a trader just this weekend. So let's take a look at this chart. We're looking at Nakamoto Games, which is a gaming metaverse coin, and I had entered this trade at a very good time and basically convinced myself to exit before benefiting from my analysis. So basically, the first lesson here is to trust your process. If you've put in the work and you've seen the results and you have the confluences that you're looking for, just set the trade, set your alerts, and walk away, which is what I did initially. Okay, so what I did was I saw my confluences. I was watching this falling channel, and you're having structure of lower lows, lower highs, lower low, lower high, lower low, lower high, higher low, higher high. So that was my first sign that maybe I want to get involved in this. Then the second confluence I had was the sign of a weakening downtrend. So in a falling channel or any sort of falling pattern, the sellers are typically having the impulse moves, which you see in this case, impulse move, buyers kind of impulsed up here, but again, impulse move, kind of responsive buying, impulse move, responsive buying, impulse move, responsive buying, not an impulse move, but then you get a buyer impulse move. So buyers showing signs that they're maybe taking control. And when you start seeing price bounce around in the upper range between the value average and the value high range of whatever pattern you're looking at, it's a sign of, in a downtrend, this is a sign that it's weakening. So that was a sign to me to get involved, which is exactly what I did. I went long, spot long, right around here, and I had my measured move target was right up here. Yeah, right there. So we had a 2.4 RR, really respectable trade. I got in, my orders got filled, and I walked away. So that was what I did right. Then what I did was I gave myself an opportunity to convince myself of reasons to get out of this trade. And if you're over analytical, which sometimes I can be, I mean, technical analysis has the word analysis in it, so you have to be analytical to some degree, but you also have to be able to stop your analytical mind from trying to think of everything that can go wrong. It is a game about probability, but I mean, ultimately, that's lesson number 2 is remind yourself of the risk reward. So my risk reward here was clear to me that the measured move is this from my entry, and this is my risk. So that's a 2.4 RR. That's worth taking the risk. So you have to remind yourself that there are going to be trades that you don't make profit on, that you get stopped out on, and that's just part of the process. As long as the risk is managed properly, your risk reward is high enough, it's worth it to take the shots if your confluences are met. And again, you just need to trust your process. Remember all the work you put in to arrive at these decisions, these informed decisions, and just move forward. So basically, don't talk yourself out of good trades. This is what I did this weekend. I came back to the computer and for whatever reason thought I should get out of this trade. It doesn't make any sense. Looking back on it, makes no sense at all why I got out of it. And, you know, when you don't get into a trade that did well, you need to take time to reflect. Like just like you take time to reflect on trades that didn't go well where you're stopped out, it's worth it to take the time to stop and look at why didn't I get into this trade? Was it something in my head? Was I stressed? Was I distracted? Tired? Were you fearful? That's something that used to happen to me when I was using too much money. I was fearful of losing the money that I was going to lose on the trade if it got stopped out, which was a sign that I was using too much money per trade. So I just shrunk my position size, and that took care of that problem. So if you think you're a bit afraid of the money you're going to lose, then you just need to make your position size smaller. But really, that's it, everybody. It's trust your process. Trust the work you've put in. Trust the results that you've got so far. When you see your confluences, just move forward. enter your limit buy orders, or enter your sell orders if you're shorting, and set your stops, set your take profits, and walk away. Set your alerts on those levels so you know when price is doing those sorts of hitting those targets or your stops, then you know about it. But otherwise, just set it and forget it. And chances are you won't be like me this weekend and you won't miss out on a damn good trade. This one went on to go up 30%. I would have taken profit here and probably just had a trailing stop loss from there. It went up 30% from entry. So an incredible trade that I stopped from happening. So I hope this helps you. And if it does, make sure you hit like, subscribe, and notifications button would be great if you hit that too. And if you're on Twitter, follow me on Twitter. I post things more real time on Twitter as far as what I'm trading and what I'm looking at. I'm CDN Crypto Hunter. Canadian Crypto Hunter. As you can see here, I had a longer beard a few months ago when I was living in the mountains, living the real mountain logger life. Although I was not logging, I was just kind of channeling my inner logger fisherman for a few months. So that's it for me today. I hope you found this helpful, and I hope you're not going to miss out on trades like I did this week, because you're going to own it and you're going to trust your process and you're going to crush your trades. So thanks again, you guys and girls, and we will see you with my next video.